Hi, everyone. It's a pleasure. It's a pleasure to be with you all today, and I really appreciate the time and hope I can be helpful to you. I know that I'll give a lot about my background through the course of this short presentation, but to give you the sort of end of it, I'm currently managing director at Three Hills Capital Partners, based in London, but with offices in Spain, or offices in Milan and in Luxembourg. I'll tell you a little bit more about what Three Hills does in the course of the conversation. But, I think I always like to do these kinds of things because I come from a family that didn't have anybody that worked in finance in it. So it took me a while to learn some of the intricacies and catch up with people that had, family and friends that worked in the industry. So I try and pass those learnings on if I can to people who are in similar circumstances. But maybe just to give you a sense of my background, I'm originally from Tucson, Arizona, which is a town of about 1 million in Arizona, just north of the border with Mexico. Like I said, grew up in a family of five. Mother was a nurse and father was a lawyer. And it was really my first sort of introduction to finance was in the internet bubble. So heading into 1998, 1999, my parents got a bit swept away in the mania that was at the time. And they said to me, look, if any money that you invest in the stock market, we will match. And at the time I'd saved up from birthday parties and Christmases and all the money my grandmothers had sent me over the years, something like $500. And so I bought a company called Yum Brands, which is the owner of KFC, Pizza Hut, and Taco Bell. And I loved it. It was, I felt completely like an owner. I would make all my friends go to Taco Bell. I would have all my birthday parties at Pizza Hut to make people spend money at the restaurants. I would check the stock price every day. And so coming out of high school, I thought, look, this is really something I enjoy. And I want to see if I can pursue it as a career. So I went to ultimately the University of Chicago, where I studied economics. The university is well plugged into the financial world, and so I thought that would be a good place to situate myself. Again, I didn't know anything in finance beyond the public market, so I joined an investment club at the University of Chicago that had a small portfolio of money that an alumni had donated, and we treated it fairly formally, and teams did pitches, and those pitches were brought to an investment committee, and we ultimately decided what to buy and what to sell. Really interesting learning experience, but still had no idea what finance was. And then around my third year of university, a lot of my friends and contacts started talking about internships in investment banking. And I had no idea what investment banking was, but it seemed like that's what everyone was doing. So I, set about to get an internship in investment banking, still not knowing what investment banking was, but thinking if I want to work in finance, I should get a job in investment banking. Somehow convinced Bank of America to hire me as an analyst over the summer, and completely bombed the internship experience. That went in never having had sort of a professional job previously. I'd worked at restaurants and worked in warehouses and that kind of thing over the summers, but never in a professional setting. I had very little attention to detail. I was not proactive. I waited for tasks to come my way. And it was also the summer of 2008 where Lehman Brothers was collapsing. They did a round of layoffs while I was interning there, and all the analysts and associates made a pyramid of all the nameplates of everyone who had been laid off. So it was, quite a trial by fire, an intro to the industry. But I did learn a lot in terms of what it means to sit in a professional setting, what it means to sort of behave in that setting, and how to prove yourself, and how to gain responsibilities and gain people's trust. And that was very different from what I had learned in school, where often, the lessons are, everything is given to you by instructions, or the tasks are given to you quite explicitly of what you need to do. There's no real ambiguity. There's kind of an answer and a wrong answer. There's, not having to navigate those sorts of dynamics. So I think that was a great learning experience to sort of sit suddenly in that seat and think, look, read the room, see what's happening, see what needs to be done, fill space, be proactive about reaching out to people for tasks and learn things that you need to learn, etc. So came out of that, as you might imagine, with no job offer, but with a lot of learning along the way. And then spent my senior year seeking other jobs in investment banking. I did enjoy the work. I sort of came to realize more or less what investment banking was. I was about halfway to understanding what investment banking was 3 months after having worked in it. And so I got a job with a company in Dallas, Texas called Cogent Partners. Cogent, and I'll say the terms, and then I'll probably need to explain a bit to explain what Cogent does, but they operate in what's called the secondary market in the private equity space. So this requires a bit of a bracket and step out of the narrative for a second and explain what is private equity, what does it mean to operate in the secondary market, but more or less, and you may know this or you may not know this, but private equity refers to the allocation of capital by funds that have received that capital from large investors. So if you think about, most companies need money for whatever they want to do. If they want to build a new factory, they need money. If they need to open a new office, they need to hire people, they need money to do that. And so they take money from investors, from people that have more money than they want to spend. They receive that money, the companies receive that money from those investors, and they use it in those different ways that come about in running a company. Now, most companies historically, because it's in your interest when you're raising money, they often mislead investors. They exaggerate the good things, they hide the bad things, and they try to get people to give them money because that's what they need to undertake all of those tasks that they want to do. And so that's given rise to a lot of scandals in the past where, a lot of investors who couldn't afford to lose money lost a lot of money in big scandals. Obviously, things like Enron, the more recent ones, but dating back, infinitely back into human history, there's been these kinds of scams. And so most countries make a distinction between what they call sophisticated or qualified investors. Those are the investors that do this professionally. They're people that have a lot of money, so can stand to lose money, and everybody else. Unsophisticated investors, people that don't have a lot of money, and they treat regulations differently if you're raising money from those different types of people. So they say basically to sophisticated investors, you can raise money from sophisticated investors, and we're not going to oversee that. They know what they're doing. They should know what they're doing. If they lose the money, they can afford to lose it. So we're not going to worry about them, but we are worried about everybody else. And so if you want to go market investments in your company to everybody, to mom and pops down the street, to old retired grandmothers, you need to adhere to a bunch of strict standards. You need to report financial reports regularly. You need to share information with everybody at the same time. You can't share good information with your friends first. And so they build, most developed countries build this architecture where there's really heavy regulation if you want to widely market investments in your company, and there's very light regulations if you're willing to only limit your fundraising to private wealthy individuals. And that's, the FCA and the SEC and all the rest, depending on each country. That regulated market is the public market. That's the stock market where shares can be traded and you can see the price moving up and down because everyone can buy those, everyone can sell those. Those companies are heavily regulated. But on the other side, oftentimes companies don't like to be publicly traded precisely for those regulations. It's really cumbersome to have to file accounts and have them audited. It's really cumbersome to have to pay attention to all the legal requirements around what you can say, to whom and when. So generally you see only large companies are willing to do that. And even among large companies, many don't like to be publicly listed. They don't need to go out to such a wide group of investors. And so they turn to what are called the private capital markets, which is that group of investors that's wealthy and sophisticated, and where you don't need to adhere to all those standards. Private equity funds are funds, they're basically groups of people that have experience investing money, evaluating investment opportunities, etc., raise money from those kinds of sophisticated investors, and then go out and try and invest it in companies in that private market without all the regulations, without all the heavy hand of the regulators. And so that's kind of where private equity sits. Cogent in particular would help investors in those funds buy and sell their positions in those funds. So just like you can own a position in a company, a share of a company, and buy or sell that between yourselves, you can have an investment in a fund that you also might want to buy and sell. And Cogent advised people that wanted to sell their interests in private equity funds or that wanted to buy interests in private equity funds. And because this was 2009, and everybody had invested all this amount in funds and now wanted cash because everybody was afraid that the world was falling off of a cliff, Cogent was doing really well. So they hired a bunch of people because everyone wanted to sell these investments they had made in private equity funds. And so I joined them in 2009. And again, a really good learning experience into how the industry works. What is private equity? I didn't know what private equity was at the time. But also a lesson in how to choose a job, right? I think Cogent was a really interesting job, but also culturally not a great place to work. It was, a place where very little effort was made to foster connection between the employees, where people would sit in silence for long stretches, very hierarchical, where only sort of senior people sat in closed offices. And it was, and I didn't select for that when I was coming out of university. I selected for anyone who was willing to hire me, was basically my mindset. And so I, didn't really think about those factors. But they ultimately came to me a great deal in the day-to-day of how I enjoyed my job. I was excited to wake up in the morning, etc. And so that was again a key lesson from that experience, was to say, look, these other factors, more than pay, more than just who will hire me, is to select for those types of jobs where I enjoy the people I'm working with, where they've built healthy culture. And so after a year at Cogent, I moved to Goldman Sachs. And they had an office in Dallas that did what they called specialty lending. So this is, again, operating in that sort of private capital markets, but actually rather than advising principals, rather than advising the people that actually own and invest, we were actually the investors. So we had money from Goldman's balance sheet that we could invest into companies, and we would go out and try and find, mid-market companies, meaning sort of companies maybe with, revenues of 50 million to 500 million that needed money and that couldn't access bank loans for whatever reason. Maybe they were struggling through a period of underperformance. Maybe it was just a weird business model that banks couldn't really understand. And we would make those kinds of loans. So we lent to companies that produced Broadway shows, for example, that are really hard to understand and get comfortable with if you're a bank. We lent to landfills, we lent to restaurants, and I loved it. It was, and I think one of the big things, if you are considering a career in finance, that I love about finance is that there's no boundaries to it, that it's anything you read in the newspaper can be relevant, any political trend, any economic trend, any social trend can be investable. And so to evaluate a landfill, you suddenly need to think about what's happening with recycling. Are people throwing as much away? What is going to happen to regulation in and around landfills? How does that tie into the evolution of technology in the recycling space and all these sorts of interesting things that you never would have thought about? Or you go to a restaurant and you're suddenly thinking about, what types of restaurant experience do people want? How is that evolving over time? Is that changing? Nowadays, you would ask, how does that change post-COVID? And so you're not limited into what you can pull into your analysis, into what you can pull into your job. And so I loved that, if you're intellectually curious and you like to read and you like to sort of hear things and act on those, then the experience at Goldman sort of highlighted to me that this was a really interesting space, that I loved being on the investment side and having to make those decisions and using all those different different facets. So I worked at Goldman for almost 4 years, but then came to realize, that looking forward 5, 6, 7 years, I could see what my job was. I knew the people ahead of me in the structure. I knew what their jobs were. And so I felt like I don't like the idea of knowing what my life looks like for the next 7 years. So I wanted to sort of shake things up. And so ultimately I went to IE Business School in Madrid. And so I decided, look, I want to gain international experience. I'd never lived outside the US at the time. I want to learn a second language and see if I can apply that in a professional setting. And so went to IE, spent 2 years there doing 2 degrees, an MBA and a master's in advanced finance. And it was just a fantastic experience. I don't know if any of you have been to Spain, but it's a great country to visit. It's a great country to live in. And it was, just an all-around fantastic experience. It gave me exposure to a lot of people that I never would have had exposure to. I think one thing I learned from that, and one thing I take away from that, is don't silo yourself. So I developed a way of thinking and a way of working in finance and investment banking on private capital markets, and found that suddenly I was interacting with people that worked in marketing or people that worked in human resources, and they came about things in a very different way. They thought about problems in a very different way. They brought different skill sets. And I realized that early in my career, I became so narrowly focused on my micro community and the way that they did things and the way that they spoke about things and the language that they used, that I, lost sight of the fact that we were just a small group of people in a much bigger ecosystem, and sort of paying attention and learning from as many people as you can, I think is really important as you move through your career and want to develop, because ultimately now at Three Hills, those kinds of skills about thinking about how do you motivate a team, how do you market a business, how do you design a restaurant are very relevant, mental models and skill sets to have. So after the 2 years at IE, my wife and I really loved living in Europe. We wanted to try and stay if we could, and so I looked for jobs in London and ultimately got a job with Three Hills Capital Partners. So Three Hills Capital Partners is a private equity fund, so operating in that world that I described earlier, and more or less pursuing a similar strategy to what I was doing at Goldman. So looking for mid-market companies that need capital to grow, analyzing and evaluating those investment opportunities, structuring them, deciding which instruments to invest through, how to price them, etc. Doing all the underwriting, so understanding the businesses, hiring accountants to make sure we understand the numbers, hiring commercial due diligence providers to understand those trends that I was describing earlier. Sort of how is consumer taste evolving, how is technology evolving, and how is that changing the shape of industries. Negotiating legal documentation, etc. So it's a wide suite of different tasks. We've grown. I joined as the 5th employee in 2016 or early 2015, and we've since grown to 57 people. We've since grown from just the London office to also the Milan office and the Luxembourg office. So it's been an amazing journey, and one where that sort of consolidates a lot of the learnings from my prior experiences, which is look, select for those cultural aspects and make sure wherever you work is somewhere you really enjoy. Select somewhere that you find intellectually interesting, that you can, really leverage your interests and what you like to learn about and discover, because that's what you spend most of your day doing, is just learning new things. And so they ought to be things that you really find interesting. So that's more or less, my journey. I'm currently with Three Hills now. I'm in the US because we're expanding our activities in the US, so helping to lay groundwork in this market, and ultimately, hopefully, we'll open a New York office over the course of next year. And so, again, a great experience and place to be for me, having sort of those transatlantic ties and the ability to use those to really build value and try and create opportunities for companies, especially ones that are looking to expand internationally from or to the US, that have operations in both markets. And I think we can really do a lot to add value to those types of companies. So that's more or less my story. Hopefully I've communicated clearly that I had no idea what I was doing at many key moments. So don't let that stop you from doing something. I think, like I said, when I went to university originally, I had in mind that I would be like a financial planner or work for a mutual fund. I just had very little idea of the different types of opportunities in finance, how that was structured, what paid well, what didn't pay well. I think those are advantages that people that have family members in finance or those sorts of things have a huge leg up, because they know what types of firms are highly regarded, what types of positions are highly regarded or highly compensated, the progression. I think, maybe one concrete recommendation is investment banking in particular is a great way into the finance industry. That if you're looking, you hear about all these different opportunities to go into finance, and you might go work for a mutual fund, you could work for a hedge fund, you could work for all these different types of things, but oftentimes the base that they're looking for is a few years of investment banking. And then in turn, the investment banks are looking for internship experience. So I think one of the things I happened to get lucky on, just because of the school I was at and the people I was around at the time, was that I did pursue those internship opportunities. If you're not doing that, I would do that. If you're interested in finance, if you find these kinds of careers interesting, those internships are often kind of a gateway into the industry, into understanding how it works, into understanding the language to use, and to understanding the career progressions. So those are important to really gain work experiences as soon as you can. Be scrappy about finding those opportunities and emailing people on LinkedIn and finding job boards and talking to friends and peers, etc., to try and find those types of opportunities, because that's what really sets, I think, a lot of finance careers in motion is that leading to an investment banking role for a few years and then a large suite of options thereafter, which is something I certainly didn't appreciate at the time, but that my peers, because they had some of those contacts in finance, they did understand. So I just kind of rode on their coattails and got lucky, but hopefully I can share at least that bit of insight.